In problem 3.1a, we recorded transactions in a journal. So when an event happened, like writing a check or receiving an invoice or a bill, we went to the general journal and we wrote down what the date of the transaction and what we would debit, what we would credit, and then an explanation. Now the next thing we're going to do is transfer the data from the journal to the individual accounts, and this transferring of data is called posting. So as you look at 3.2a in the general journal, notice that someone has gone through and recorded transactions for the month of August. So on general journal page 5, someone has recorded that we paid the rent on August 1st, and it was $1,200, and they recorded that it would be a debit to rent expense and a credit to cash, and it said we paid the rent and the check number was $145. So if you were to look at the next two pages here on pages 5 and 6, you would see that everything is there, all the debits and credits are ready to be put into the accounts, and now we're actually going to do that. So we're going to start with the line that says rent expense. So that means we're going to go to the rent expense account and we are going to debit rent expense for $1,200. So I'm going to find the rent expense account. Okay, so rent expense is account number 512, and this is a general ledger account. So we have to write down August 31st because it's a new month and a new day. And we're going to debit it for $1,200. So we put it in the debit column. Now we're going to update the balance. Now this is the balance of this account. It's called a running balance. And previously, it's as of the July 31st, had a $900 debit balance. Now we're going to debit a debit. If you were to think about a T account with two debits, you would add them together. So if you have a debit that you debit, you need to add them to find the new balance. So the new balance of rent expense is $2,100. It came from journal page 5, so we put that in next. So we put in the date, we put in the amount. We brought the balance up to date, rewrote where it came from, general journal page 5. The last thing we do is take this account number up here, 512, and we're going to go back to our general ledger and put 512 right there to show that we have actually done this. So if you had a to-do list and you actually accomplished something, you would cross off the task that you had done. Putting the account number in the post reference column is like drawing a line through something you've already done. Anybody who looks at this journal would know that someone has posted the first entry, but nothing else has yet been posted. So let's now go to the next line. Here's the next line. Cash is going to be credited for $1,200. So we go to the cash account and we put in the month and the day, and we are going to credit it for $1,200. Now notice that it had a previous balance of $24,113. Now we're crediting it, so we're making the balance decrease. If you thought of a T account with a debit and a credit, you would subtract the two. It would still be a debit balance, but now it's a debit balance of $22,913. So here's the date, the amount. We updated the balance. So remember, debit was credited, so we have to subtract. It's still a debit balance. We're going to write down where it came from. It came from page 5 in the general journal. And then we're going to take account number 111. We're going to go back to here and put in 111 to show that, yes, we did put it in the account. So this is always the last thing you do. Not the first, but the last. The next account is going back to cash and debiting it for $36. So we'll go back to cash, and this time we do not need to write August because it hasn't changed, but we do need to write the date. Now this is a debit, so we're going to the debit column and putting in $36. we need to combine this debit with the debit balance. So when you have a debit, you must add. That's going to bring our cash to $22,949. We're going to say what journal page we took this information from. So this was journal page 5. So here's the date, the amount, updating the balance, recording where it came from in the general journal, and last taking the account number 111, going back to the journal, and this is showing yes, it is posted. Next is going to accounts receivable and crediting it for $36. So we're going to find accounts receivable, which is right below cash, and we have to put in the new month and the date. And this was a credit to accounts receivable, so we're putting it in the credit column. So here's a debit balance that we're crediting it. Again, if you think about a T account, if you had a debit and a credit, you'd subtract the two sides. The difference is still a debit balance. Now the balance is $114. Came from journal page 5. We're going to take account number 113, go back to here, and record it to show that we did post it to accounts receivable. Here's cash again on the 8th. We're debiting cash for $3,690. So going back to the cash account, we're going to record the date, which is the 8th. The debit is for $3,690. Here's our debit balance here. We're debiting a debit. We're going to add it together. Now we have $26,639. It came from journal page 5. So we've put in the date, the amount, updated the balance, told where it came from. Fifth and final step is to take the account number back to here and show the number, and that means yes, it's gone into the account. Okay, so the next one is to go to income services and credit it. So we're going to find income from services. Again, this is the first time, and we've used this account in August, so we have to write August 8th. We are going to credit the revenue account for $3,690. When we update the balance here, we have a credit balance, and we're crediting a credit. If you think in terms of a T account, both of these numbers would be on the same side, so you add them. And now we're going to have a credit balance of $10,490. Came from journal page 5. We take 411, go back to our journal and put in the account number here to show, yes, I have put it in that account. It has been posted. Next one is accounts payable. Accounts payable is debited on the 10th. So we go to accounts payable. I'm going to browse through and find it. Okay, here's my accounts payable. I'm going to have to put in the month and the day because it's a new month. And it is a debit. And so here's the pre-existing balance, $4,236 credit. We're debiting it. When they're different, you subtract. It's still a credit balance, but now it's a smaller credit balance of $3,624. Came from page 5. Last, you take the account number 221, you go back to the journal, put it in to show, yes, I have posted it. Cash is then credited for $612. So we go to the cash account. We're going to put in the date. We're going to put in the amount. It's a credit. So now we have a debit balance that we're crediting. When they're different, you subtract. That'll take our cash down to $26,027. Came from page 5. We take 111 and go back and put it in here. As we continue on, we go to cash again on the 15th and debit it. So we're going to go back to cash on the 15th, debit it for $3,254. Here's our previous balance, a debit. We're debiting a debit, so you add. That brings our cash balance to $29,281. The journal page is still page 5, and we're taking account number 111, going back to here and putting that number to show, yes, we have put it into the account. Next, we go to income from services and we credit it. So we're going to find income from services. And let's scroll down until I find that. Okay, so we're going to put in the date, the 15th, and it's a credit. That account's getting bigger. Here's our credit balance. We're crediting a credit, so you add when they're the same. That's going to bring our revenue account up to $13,744. Came from page 5, and we take 411 and we go back to our journal and put in 411. And the next one is wages expense. So we go to wages expense. And it's like this is something that I didn't block out here. But anyhow, let me change this for a second. You would put in the date again. And you would put in the debit. And here's your debit balance. You're debiting it again. You add them together. And here's our new debit balance. And here is it coming. It's coming from page 5, and we're taking 511, going back to here, and putting in 511 to show that that's been posted. Then we're going to go to cash and credit it. So I'm going to go back to cash. On the 16th, we're going to credit it. And when you have a debit balance and you debit, credit, they're different. You subtract, you still have a debit balance, but now our balance has gone down to $27,695. Put down where it came from, take 111, go back to your journal and record it here. Next, we go to accounts receivable, and we're going to debit it for $830. So we're going to accounts receivable. And this is on the 18th, and it's going up by $830. You have a debit balance here. You're debiting a debit. You add them together. Now our customers owe us $944. Came from journal page 5. We take 113 and go back to the journal and record it here. Then we go to the revenue account and record the credit. When you credit a credit balance, it's going to make it bigger. $14,574 came from page 5, and we're going to take 411 back to here to show that we've done it. Then we're going to debit supplies expense for $795. So I'm going to find supplies expense. I'm going to put in the date. So it's the month and the day. The debit of $795. Here's a debit balance that we're debiting. When you debit a debit, you add. Now we're up to $1,115. Came from page 5. Take 515, go back to the journal and record it here to show that you've done it. Excuse me. Then you go to accounts payable, and we're going to credit it. So we find accounts payable. And here's the 20th. And here's our credit. And here's the credit balance that we're crediting. So credit, you add. New balance, $4,419. Came from page 5. Take 221, go back to your journal, and there we go. And then we go to page 6 of our general journal. So looking at page 6 of our general journal, excuse me, in the 22nd we go to cash and we record the debit to cash. So I'm going to go to the cash account, put in the date, the 22nd, put in the debit, $3,679. Here's the debit balance that we're debiting. When you debit a debit, you add. Now we have this much money, $31,374. We're going to put where it came from. Now, and this time it's from journal page 6. And we take 111 back to there. Then we go to income from services and credit it. Okay, so we're going to put in the date, the 22nd, the credit, $3,679, credit, you add. Now we have revenue of $18,253. Remember, it comes from page 6 now. We go back to number and put number 411 right here to show that we have posted it. So you would continue on with the rest of these transactions until you had them all posted to the accounts. Okay, the next step would be, when you're done, to do a trial balance, which is where you would write the name of the company, trial balance, and the day that you're doing it on, which is August 31st. You would write all the accounts down in the general ledger order. So remember, cash is first and accounts receivable. So here are all your assets. Here's your liability, capital drawing, revenue, and all your expenses. So this would just be right out of that. Then you're going to take all the account balances. So once you do all your posting, you're going to have balances for cash, accounts receivable, and so forth. Notice that assets, drawing, and expenses have debit balances, and your liabilities, your capital, and revenue have credit balances. When you're done, you should have two equal totals, because the debit should equal the credit. There should be a single line above this yellow and a double line underneath. And I'm going to stop the video.